My name is Rachel Mercer, and I am 44 years old. On a Wednesday morning in November, I sat across from my brother in a conference room at First National Bank on Clement Street, and I watched his face go through 6 different expressions in the span of about 4 seconds. Surprise, calculation, anger, something that looked almost like shame. Then the mask came back, and he smiled the way he always smiled when he was buying time. He had brought a folder. I had brought a folder. His folder had 2 pages. Mine had 47. What happened in that conference room ended something I had spent 9 years building and cost my brother everything he thought he had. I did not raise my voice once. I never do. But by the time we walked out of that building, the banker knew everything. The loan officer knew everything. And my brother understood for the first time that he had spent 9 years borrowing against a woman who had been keeping records the entire time. Welcome back to her silent triumph, where quiet women make careful decisions that last, and where the truth always comes with documentation. If someone in your family has ever used your name without your full understanding, stay with me. Drop a comment and subscribe. I should tell you about my brother first, because Daniel is not a villain in the way people imagine villains. He is not cruel. He does not shout. He does not threaten. He is charming in the specific way that charming people are dangerous, because charm makes you believe that everything is fine right up until the moment that it isn't. Daniel is 3 years younger than me. Growing up in our house in Sacramento, he was the one teachers liked, the one neighbors praised, the one my mother held up gently when she wanted to make a point. Not in a mean way. My mother is not a mean woman. But there was an understanding in our family that Daniel was the one with potential. He was social and quick and funny. I was the one who studied. I was the one who stayed late and read contracts and got the numbers right. My father used to say that Daniel would go far and I would make sure he got there safely. He meant it as a compliment to both of us. I understood it that way for a long time. I work in hospital administration. Have for 18 years. It is precise work. Budgets, compliance, staffing ratios, vendor contracts. The kind of work where a misplaced decimal destroys something real. I am good at it in the way that people who grew up being careful with numbers are good at things. Not brilliantly, not flashily. Reliably. Exactly. Daniel went into real estate. He had a gift for it. People trusted him on site. He sold residential properties in Sacramento for 4 years and was genuinely excellent at it. He made good money, spent it quickly, made more. His life looked the way confident people's lives look from the outside. Easy, forward-moving, like everything was going according to a plan he had never needed to write down. Then the market shifted in 2014, and Daniel's plan, which had never been written down, turned out not to exist. He called me on a Sunday afternoon. I was at my kitchen table doing quarterly reports for the hospital. The call came at 2:17 p.m., I know because I looked at the time before I picked up, the habit of someone whose afternoons are scheduled. He said he needed help. He said it quickly, in the way he said things when he had rehearsed them and wanted to get through the rehearsed part before the improvisation had to begin. He had a listing, a duplex in East Sacramento, a property he was certain would sell within 60 days. He had a buyer lined up nearly. He needed a short-term bridge loan to cover a deposit on a second property he was flipping simultaneously. The numbers were tight because of timing, he said. Just a timing issue. He needed someone with strong credit to co-sign a loan, just for 60 days, maybe 90, the kind of thing that would be invisible on paper by the spring. He needed $48,000. I asked questions. I asked the questions I ask at work when a vendor presents a proposal that sounds better than it should. What is the collateral? What is the exit strategy? What happens if the 60 days becomes 90 and the 90 becomes 6 months? Daniel had answers for all of them, and his answers were smooth and confident and warm, and I understood even at 2:17 on that Sunday afternoon that the smoothness was part of the problem. But he was my brother, and $48,000 was a loan, not a gift, and he had answers for all of my questions. I said yes. That was October of 2014. It is important that you remember that date. The first loan was repaid in 8 months, not 60 days, not 90. 8 months, during which I received 4 different explanations for the delay, each one plausible, each one slightly different from the last. The buyer fell through. The second property needed more work than the inspection had shown. The refinancing took longer than the broker had projected. By the time the final payment came in, I had learned something about my brother that I should have already known. Daniel did not lie to me. This is the thing that confused me for years, and I want to be precise about it because precision matters. He did not tell me things he knew to be false. He told me things he believed, in the moment he was telling them, with the complete and temporary conviction of someone who needed them to be true. The problem was not dishonesty in the traditional sense. The problem was that Daniel's relationship with the future was optimistic in a way that had no connection to evidence. I call it hope math. He would look at a situation and calculate forward from the best possible version of each variable. 60 days became 8 months not because Daniel planned to deceive me, but because Daniel had genuinely believed 60 days was reasonable when he said it. The belief was real. The math was wrong. After the first loan was repaid, I told myself I understood the situation better now. I told myself I would be more careful next time. There were 8 more next times. Here is what 9 years of family lending looks like when you lay it out flat. 2014, the bridge loan, $48,000, repaid in 8 months. My credit score dropped 11 points during the period it was outstanding because my debt-to-income ratio shifted. 2015, a personal loan co-signed for Daniel's new vehicle. He needed a truck for the business, he said. He needed to transport materials, $22,000. He made payments for 14 months and then the payments slowed and then they stopped. I covered 6 months of payments before he resumed. I told myself it was a rough patch. 2016, a business line of credit for Daniel's LLC, which he had named Mercer Property Solutions without asking if I minded that it carried our family name. The line of credit required a personal guarantor. I signed. The limit was $60,000. Over the following 3 years, he drew on it repeatedly, always paying back enough to keep it from defaulting, never enough to close it. 2017, a second vehicle loan when the first truck needed too much work to repair economically. $17,000. This one he paid on time for its full term. I remember being relieved. I remember thinking we had found a stable rhythm. 2018, a short-term personal loan, just $12,000, for a tax liability he had not anticipated. He said his accountant had made an error. He said it with the calm of someone reporting a weather delay. It was repaid in 4 months. This is the one I think of when I think about how normalization works, because $12,000 had become a small number by 2018, and I had done that myself by saying yes enough times that the scale shifted without my noticing. 2019, the line of credit limit was raised. Daniel requested the increase. I was the guarantor. The new limit was $90,000. I did not say no. I have asked myself many times since then why I did not say no, and I think the answer is that by 2019 the habit of yes had become its own kind of inertia. The financial relationship between my brother and me had become the architecture of our family dynamic, and I could not see clearly enough to understand what I was standing inside of. 2020, the pandemic year, Daniel's business contracted, as most businesses did. He drew heavily on the line of credit. I received no payments. I covered the minimum payments myself for 7 months because the alternative was a default that would damage my credit rating severely. 7 months. I kept a spreadsheet. I always kept a spreadsheet. I just had not yet decided what I was going to do with it. 2021. A new loan. Daniel said he had an opportunity. A commercial property, undervalued, a seller who needed a fast close. He needed $35,000 for the down payment. He had already spoken to a lender. He needed me to co-sign one more time. Just this one, he said. This one will change everything. I sat with the phone against my ear and looked out my kitchen window at the street below. A woman was walking a dog. The dog stopped at a fire hydrant. The woman waited. Life was happening in its ordinary way outside my window while my brother told me that one more loan would change everything. I said I would think about it. That was the first time in 9 years that I had not said yes immediately. That night, I opened the spreadsheet. I have a spreadsheet for everything. This is not a personality flaw, or if it is a useful one. I have spreadsheets for my household budget, my retirement projections, my hospital's quarterly variance reports. I had a spreadsheet for Daniel that I had been updating since 2014, at first just to track repayment dates, then gradually more detailed as the complexity grew. I opened it that night, and I looked at it the way I look at hospital budget reports, when something doesn't add up, without assumption, just following the numbers to where they led. The numbers led somewhere I had not fully looked at before. Over 9 years, Daniel had borrowed, with my name attached in some form, a total of $284,000 across all the loans and the credit line draws, and the payments I had covered during the months he could not. Against that, he had repaid, including all the months I was not the one covering the payments, $219,000. The difference was $65,000. $65,000 that existed in some form as a gap between what he had borrowed under my name and what had come back. Some of it was technically still outstanding on the line of credit. Some of it was in the payments I had made on his behalf during the 2020 coverage months, which he had verbally promised to repay, and had not. Some of it was interest and fees I had absorbed because I was the guarantor. I sat with that number for a long time, $65,000. In the quiet of my apartment at 11 at night, I thought about what $65,000 was. It was 2 years of my salary when I had started in hospital administration. It was a down payment on a house in the market where I lived. It was what I had saved in my emergency fund exactly, which I had built carefully over 15 years and never touched. I did not call Daniel back the next day. I called my financial advisor instead. Her name was Patricia Osei. She had managed my retirement accounts for 6 years, and she had the specific quality of the very good at their job. She listened completely before she spoke. I laid out everything. The 9 years, the numbers, the spreadsheet. I told her about the new request, the $35,000, the commercial property. She was quiet for a moment. Then she said, "Rachel, do you know what your credit score is right now?" I said I had a general sense. She pulled it up. She told me the number. It was 41 points lower than it had been in 2014. She said, "This is from the outstanding guarantor liability and the elevated debt utilization on the credit line. You are being reported as having significant active debt that you are not the primary borrower on, but you are legally responsible for. This affects your mortgage eligibility, your personal loan rates, and in some scenarios your insurance premiums." I said, "What would it look like if I closed the credit line and removed myself as guarantor from any outstanding obligations?" She said, "Significantly better. Within 12 to 18 months you would likely recover most of the lost points." She paused. "There is a conversation you need to have." I knew there was. I had known for longer than I wanted to admit. Patricia referred me to an attorney named Gordon Hatch who specialized in personal liability and family financial arrangements. I made an appointment for the following Thursday. Gordon Hatch's office was on the 4th floor of a building near downtown Sacramento. He had diplomas on the wall and a desk that was very clean except for a yellow legal pad he wrote on with a mechanical pencil throughout our entire conversation. He wrote in small, precise letters. I brought the spreadsheet. I brought 9 years of loan documents, cosign agreements, the credit line paperwork, the bank statements showing the months I had covered payments. I had organized everything chronologically in a cream-colored folder with tabs. Gordon read for 20 minutes without speaking. I sat across from him and waited. Through the window behind him, I could see the tops of the trees on the street below, the leaves mostly gone, the branches making their winter patterns against the gray sky. He looked up. He said, "You're a guarantor on an active business line of credit with a current outstanding balance of $31,000. I said, "Yes." He said, "You have been making direct payments on his behalf, totaling approximately $18,000 over the past 3 years that you have documentation for, but no formal repayment agreement." I said, "Yes." He said, "And he has now asked for an additional $35,000. I said, "Yes." He was quiet for a moment, turning the yellow legal pad over and then back. "Here is your situation," he said. You cannot force repayment of the $18,000 without a written agreement, and you don't have one. You can close the credit line by notifying the bank, though your brother will need to clear the outstanding balance first or it goes to collections, which affects both of you. And if you co-sign another loan and he defaults, you are liable in full. He set down the pencil. The question is not whether you have a problem. The question is what kind of solution you want. I said, I want a clean exit. I want my credit score back. And I want to have one conversation with my brother in which everything is on the table. Gordon said, I can help you with the first two. For the third one, bring the folder. I did not tell Daniel what I was planning. I want to be honest about this. I gave him no warning. I have thought about whether that was fair, and my conclusion is that 9 years of co-signing loans without adequate information of my own was the imbalance that needed correcting, not the absence of a warning before I corrected it. I called Gordon and asked him to draft a formal letter requesting that Daniel clear the outstanding balance on the credit line within 30 days so I could close my guarantor status. The letter outlined my legal position clearly and cited the specific clauses of the original credit line agreement. I asked the bank to place a formal note on my account indicating that I was seeking to remove my guarantor status pending resolution of the outstanding balance. I sent Daniel the letter by certified mail. He signed for it on a Tuesday. His call came that evening at 7:42 p.m. He did not shout. Daniel does not shout. His voice was careful and controlled, and underneath the control there was something that sounded like the first honest fear I had ever heard from him. You sent me a lawyer letter, he said. I did. Rachel, a pause, the sound of him trying to recalibrate. This is a family matter. You don't send a lawyer letter to your brother. I sent several requests informally over the years, I said. I didn't use a lawyer for those. You're right that this is different. What does this mean for the business? That depends on whether you clear the balance in 30 days. You know I can't clear $31,000 in 30 days. Then we'll need to talk about what we can work out. I kept my voice the way I keep it in budget meetings, when a number is wrong and the room needs to understand that calmly. I think we should meet at the bank, with both our advisors present. A long silence. I counted 7 seconds. Fine, he said. Fine, we'll meet at the bank. The meeting was on a Wednesday morning. I arrived at 9, 15 minutes before Daniel. I had spoken with Gordon and with Patricia. I understood exactly what I needed from the meeting and what I was willing to offer and what I was not. Daniel arrived with a man named Stuart who was, apparently, his accountant. Stuart was a small man in a large coat who spent the first 10 minutes of the meeting looking at his phone, and the rest of it looking at Daniel, with a specific expression that I recognized from hospital finance meetings. It was the expression of someone whose client has not told them the full story, and who is learning in real time what the full story is. The loan officer's name was Jerome Wells. He had managed the credit line since 2016. He knew the account well. He greeted us both professionally and then sat at the head of the table and opened his laptop and waited. Daniel opened his folder. It had 2 pages. A summary of the property business, 3-year projections, a letter from a potential investor. I opened my folder. I placed the first document on the table. 9 years of cosign agreements, in chronological order. Daniel looked at the stack. His expression went through those 6 changes I mentioned at the beginning. Surprise, calculation, anger, shame briefly, then the smile, the buying time smile. This is everything, I said. Every loan, every guarantor agreement, every payment period, and the months where I covered payments on his behalf. I set the second document on top. This is the spreadsheet. Total borrowed under my name or with my name attached, $284,000. Total repaid, $219. Outstanding difference, $65,000, of which $31,000 is the current credit line balance, and the rest is undocumented informal repayments I made on his behalf. Jerome Wells looked at the documents. He looked at Daniel. Daniel said, Rachel, this is not the meeting I agreed to. I said, this is exactly the meeting I told you we were having. everything on the table. Stuart, the accountant, was no longer looking at his phone. Daniel looked at his 2 pages, and then at my 47 pages, and then at Jerome Wells, who was reading with the careful expression of a man who understood his institution's exposure clearly. "I didn't know the history was this extensive," Jerome said, not to anyone in particular. "It is," I said. Daniel said, "Rachel, I have always paid you back." I said, "You have paid back 219,000 of 284,000. That is not the same thing." He opened his mouth. He closed it. Stuart leaned over and said something quietly to Daniel. Daniel shook his head once. Stuart leaned back. "Here is what happened in the rest of that meeting, and I am going to tell it plainly." Jerome Wells confirmed that under the terms of the credit line agreement, as guarantor, I was liable for the full outstanding balance in the event of non-payment. He confirmed that I had the right to request removal of guarantor status, which would require the balance to be cleared or transferred. He confirmed that the bank would work with both parties to facilitate a resolution. Daniel's investor letter, it turned out, was a letter of intent only, not a commitment. Jerome knew the difference. Stuart knew the difference. I knew the difference. Daniel, it emerged in that meeting, had understood them to be the same thing. The $31,000 balance would not be cleared by any incoming investment within 30 days. This was clear within about 15 minutes of the meeting. What Jerome offered, after a conversation with a colleague he called on the phone during a brief recess, was a restructuring. The credit line balance could be converted to a short-term personal loan in Daniel's name alone, with no guarantor, if Daniel could demonstrate sufficient individual creditworthiness. He would need to apply. The application would take approximately 2 weeks. If approved, my guarantor status would be removed. If not approved, we were back to the original problem. Daniel's credit score, which came up as part of this conversation in a way I had not anticipated but was not surprised by, was not strong. The years of variable payment history had taken their toll. He did not qualify on his own. We sat with that for a moment in the conference room, the 4 of us, with the documents between us and the gray November light coming through the window. Daniel looked at me. For the first time in 9 years, the charm was entirely gone. He looked tired. He looked like someone who had been running a long time and had just realized the road ended here. "What do you want, Rachel?" he said. I said, "I want to be off the credit line. I want documentation of the 18,000 in informal payments I covered, and I want to stop co-signing things." He said, "And if I can't qualify for the restructured loan?" I said, "Then the balance goes to collections. I have already spoken to Gordon about protecting myself in that scenario. It will hurt your credit. It will also hurt mine. Less than staying on this account will over the long term, but I understand it will hurt mine." Stuart said, quietly to Daniel, "She's right about the exposure." Daniel looked at the table. He looked at my folder. He looked at the spreadsheet page on top. He said, "I didn't know it was 65,000. I said, "I know. I was keeping track for both of us." I want to pause here and tell you something I have not told many people. Sitting across from my brother in that conference room was one of the hardest things I have ever done. Not because I was angry. I had moved through anger a long time before that meeting. It was hard because of what I could see on his face when the charm fell away. He was not a predator. He was not someone who had set out to use me. He was someone who had needed help, and I had helped him. And over 9 years the helping had become a structure he lived inside without understanding its weight, because he was not the one carrying it. He had borrowed against my credit the way some people borrow against the goodwill of people who love them. A little at a time, always with good intentions, always certain the next thing would be the thing that fixed it. And I had let him. I had let him because he was my brother, and because saying no is harder than it looks when the person asking is someone you grew up with. The meeting was not revenge. I did not want to hurt him. I wanted to stop. I wanted the architecture we had built, the one my father had sketched in his compliment about me making sure Daniel got there safely, to stop standing on my foundation. That was all. Stop. That was the entire goal. After the meeting, Daniel and Stuart went to Daniel's bank to discuss options. I drove to Patricia's office, and we reviewed the next steps. She had already begun preparing the formal request to remove my guarantor status pending resolution. It took 6 weeks. During those 6 weeks, I spoke to Daniel 3 times on the phone. The conversations were careful and brief. He had found a private lender willing to take on the credit line balance at a higher interest rate, which hurt him, but solved the immediate problem. The transfer was completed on a Friday, and on the Monday after that I received confirmation from First National that my guarantor status had been formally removed. My name was off the account. For the first time in 9 years, there was no outstanding liability with my name attached to my brother's business. I sat at my kitchen table with the confirmation letter and a cup of coffee, and I did not feel triumph. I felt something quieter. I felt the specific stillness that comes after something loud has stopped. Like when a machine you have gotten used to runs constantly, and then one day it is switched off, and you notice the silence before you remember what you were supposed to be doing. I had gotten used to carrying this. The silence of not carrying it was its own kind of adjustment. The $18,000 in informal payments, the months I had covered, the money that had no written agreement, Daniel and I worked out between ourselves, outside of lawyers and banks, over the course of 2 conversations in January. He acknowledged the amounts. He did not dispute the spreadsheet. He proposed a repayment schedule, $250 a month, which would take 6 years. I accepted it, not because 6 years felt adequate, because the alternative was litigation against my own brother for amounts I had agreed to without documentation, which would cost more in legal fees than the dispute was worth, and which would end our relationship in a way I was not certain I wanted. $250 a month. He has made every payment since January. I note them on the spreadsheet the same way I always have. I will continue noting them. My credit score, by April, had recovered 22 of the 41 lost points. Patricia said by end of year, it would likely be within 15 points of where it had been in 2014. That 15-point difference, she said, would probably never fully return because of the length of the liability history on my report. 9 years leaves a mark on a credit report the same way it leaves a mark on everything else. Daniel's business is smaller now. The commercial property fell through, as commercial properties sometimes do when the financing is uncertain and the timing is wrong. He is still selling residential real estate, doing it competently, making a living. He is doing it without my name attached. He called me on my birthday in March. He said happy birthday. He said he was sorry. The sorry was not a single apology for a single thing. It was the kind of sorry that covers a span of years, that tries to compress 9 years of unexamined assumption into one word spoken on a birthday phone call. I said thank you. I said I was glad he called. I said I hoped the market was treating him better than the winter. He said it was picking up. We talked for 22 minutes about ordinary things, our mother's garden, a movie we had both seen, a restaurant in Sacramento that had closed after 30 years. By the end of the call, it sounded almost like the calls we used to have before all of this. Almost, not quite. The almost was enough for now. There is something I want to say about the spreadsheet before I finish, because the spreadsheet is the part of this story that people in my life have reacted to most strongly when I have told them pieces of it. Some people find it cold. They say, who keeps a spreadsheet on their brother? They say it as though the keeping of records is itself a kind of betrayal. I have thought about this. Here is what I believe. I kept the spreadsheet because I was a guarantor on financial instruments, and guarantors are legally liable, and legally liable people should know what they are liable for. I kept it the same way I keep spreadsheets at work, not from suspicion, from responsibility. The spreadsheet did not betray Daniel. The spreadsheet told the truth. And the truth, in this case, was information that should have been visible to both of us from the beginning, information that would have allowed us to make clearer decisions together if we had looked at it together instead of me, maintaining it quietly for 9 years while he operated on hope math. If there is a version of this story where things go differently, it is the version where I show Daniel the spreadsheet in 2016, where I say, here is what we have done so far, here is what is outstanding, Here is what this is costing both of us. Where we have a conversation based on numbers instead of trust that was never converted into information. I did not do that. I thought the kindness was in not making it formal. I was wrong. The kindness would have been in making it clear. I am still in Sacramento. I have not moved, not changed jobs, not altered my life in any visible way. The apartment is the same. The hospital is the same. My morning routine is the same. What is different is the morning I check my financial accounts and do not see an outstanding guarantor liability with my brother's business name attached. What is different is the conversations with Patricia that are now about my own retirement projections, my own plans. What I want to do with money I have spent 9 years being cautious about spending because it was always potentially needed elsewhere. She asked me last month what I would do if I were making financial decisions purely for myself, with no contingency for anyone else. I said I would buy a house. She said, good, let's look at what that takes. I said, I know what it takes. I've been watching the numbers for a long time. She smiled. She said, I know you have. The cream-colored folder is in the filing cabinet in my home office. Every document, every loan agreement, every bank statement, the spreadsheet printed and dated. I do not look at it often, but I keep it. Because the women who love their families most quietly are sometimes the ones who have to be most precise. Not to use the precision against anyone, but because precision is the only thing that eventually speaks clearly enough to be heard. That is my story. 9 years, one spreadsheet, and one Wednesday morning in November when everything that had been invisible was finally put on the table. If someone in your life has borrowed against your name and called it family, share this with someone who needs to hear it. Drop a comment. Hit subscribe. I will see you in the next one.